Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is June 20th, 2024. On the Kickstart video, I take a look at the three major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. Let's get started. I'm going to start by taking a look at the hourly chart of the euro versus US dollar. And what is important from this chart is you see this green line right here. This green line represents the 200-hour moving average. And in trading yesterday, the price high came up to that green line, found willing sellers, and it came up again, found willing sellers in the agents, I should say. We came up to that level, maybe moved up a pip or two above the level, and found willing sellers once again against that level. Finally, the buyers gave up, and the price started to rotate to the downside. This blue line represents a 100-hour moving average. And you can see the price has been trading above and below that blue line. Also, the 61.8% retracement has seen the price move above and below it as well. So there is some reluctance to move lower from this level right here. It's staying relatively close to the 200-hour moving average, but what we can say is that 1.0743. And moving lower, that 200-hour moving average is going to be a key barometer, not only today but going forward. If the price moves above it, then we can expect further upside momentum. If the price stays below it, then the bias remains more to the downside, and we'll resolve what happens here at the 100-hour moving average, 61.8% retracement. And by the way, this yellow area as well. So what does this yellow area represent? What does the 61.8% retracement represent? Well, if I go to the 4-hour chart, we can see things much more clearly. And the 61.8% retracement represents this move to the upside here from the April low to the June high. That level comes in at 1.07208. And this yellow area is defined by a number of different swing lows and highs going back in time to this area right through here and here and here and here and here. You get the idea. There's just a number of different times that the price on a 4-hour bar either found support or resistance against this area, including a number of times in last week's trading. Admittedly, this week we've seen the price move above and below that area. It's still getting a little bit dicey as the market tries to figure out which way it wants to go. But also of interest this week is that the price tried to move back above the 50% of this move to the upside, but found willing sellers up there and rotated back to the downside. And again, just imagine that 200-hour moving average is near these highs right here. Up to 1.0743 currently. There is that reluctance to move higher. There also, however, is some reluctance to move a bit lower, at least right now. If we stay below the 34 level, stay below the 43 level, that 200-hour moving average, things would be more bearish. If we start to move a little bit back below the 107.20 level, and we're currently trading right around that level, and stay below that level, we could expect to see further downside momentum with different swing levels in play on the progressive move to the downside. So sellers are trying to stay in control. We'll see if they can keep control by staying below the 34.6 level, also the 43 level, that 200-hour moving average. So take a look at the dollar versus yen on hourly chart. And what we're seeing is a rotation to the upside in trading here today. Recall from trading last Friday, the high price came in at 158.24, and trading this week on Tuesday, the high price came in just below that level, found willing sellers. But in trading yesterday, what did we do? We found support buyers ahead of the rising 100-hour moving average. We need to get below that level to open the door for further downside. Recall from Monday's trade, the market low came in right near that 100-hour moving average. So we have two tests of the 100-hour moving average this week, and each of them found support. That was really the clue and helped to push this price to the upside. What is interesting in the price action right now is that the price low off the last hour bar came right back down to the high prices that we saw last week and this week, earlier this week, and found support buyers. So the buyers are keeping the price above that 158.24.25 level. As long as the price can remain above that level, then the bulls remain firmly in control for this pair. Alternatively, if the price were to move below that level, they still need to get below the 100-hour moving average to prove that they can push this price to the downside. So there are two key levels here on the downside. Absent that, and the buyers remain more in control in the dollar versus yen, regardless of what the Bank of Japan says. They may intervene. That we'll see the price move below those levels in that case. But here's what we stand on the daily chart. Admittedly, the price did spike higher all the way up to 162.08 before we had intervention back here in the month of April. But we're still a little bit of ways away from that level right now. But we're open road ahead, honestly, for the dollar versus yen, as long as the price can remain above those technical levels off the hourly chart. Let's take a look at the sterling versus US dollar to complete our look around the three major currency pairs. And this pair had to get above the cluster of moving averages, including the 100-hour moving average, the 200-hour moving average, and the 100-bar moving average on the 4-hour chart to increase the bullish bias. It got above 2 yesterday, but could not sustain momentum. We had the Bank of England today, which was a little bit more dovish, unchanged policy, and that helped to push the price lower below the 100-hour moving average, below the 200-bar moving average on the 4-hour chart, and to this swing area floor right here. Admittedly, in trading last week and this week, the price moved below that floor, also moved below the 200-bar moving average on the 4-hour chart. So there is a number, 1, 2, 3. Now we're on the fourth break of the 200. And we are holding this support here. We need to get below the 126.748 and stay below that level to increase the bearish bias. As long as we can stay below the 200-bar moving average on the 4-hour chart, that would also keep the sellers more in control. So that's my look at the major currency pairs. The euro, the sterling, a little bit more bearish, the dollar versus yen. The upside is the favored way. It's breaking to the upside. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.